So our team did Adidas and Nike. Which is the better investment? We're going to take a look at a few things to try and determine that. So this is an overview of what we're going to cover. We're going to first take a look at the industry, what the key drivers are, the timelines of the different companies, and some profiles of what they offer, both Adidas and its competitor Nike. Then we're going to look at what the outsider opinion is, compare that with our analysis, and then come up with a determination. So first, the industry. Adidas competes in the sporting goods industry, which is heavily reliant on the ability for consumers to spend their disposable income, and that tends to go up and down with the health of the economy. That's one of the main drivers, and then it also impacts a couple of different industries as well. In the future, it's expected that this is going to grow about 3% year on year into 2019, and again, it's very closely tied to disposable income, demographics, and the overall economy health. These are the major players within that industry. So of course we have Nike, Adidas, and then coming up are Skechers, Under Armour, and Puma. But if you look at the overall brands, you can just see how much power and the large scale that these companies have built. The top one being Nike at just the brand value is $19 billion, and then comparing that to Adidas and Under Armour, which are below. So taking a look at the market share, Adidas has fallen just recently to Under Armour. And sportswear, that includes footwear and apparel, but Skechers is closely catching up as well. We can take a look at the graphs, and here we can see if it's segmented by footwear and also apparel, that Nike's on top, Adidas is in the middle, and Under Armour is quickly gaining, especially in apparel. Taking a look first at Adidas, they're all in. That's their motto. And their mission is they're a global leader. They want to be a global leader in the sporting good industry. And their core values are they want to be innovative, they want to be consumer focused, and they want to be globally and socially responsible. They were founded in 1949 in Bavaria, and Adidas was their founder. Herbert Hainer is now their CEO. We took a look at the industry that they compete in. To go a little bit more into their history, their founder, Adidas, wanted to create the best possible athletic wear for athletes to help them compete. And he created his first shoes between 1900 and 1949, and then he also created that three-stripe logo that we're all very familiar with. They then expanded into clothing, tracksuits, cleats, as well as equipment like the soccer balls. Then going into the future, they created one of the first wearables in 1984 and have expanded since then. These are the brands that they've acquired. Reebok being more popular in the US, TaylorMade is golf oriented, and they have things all the way from Adidas Performance, which is in competitive sports, over to kind of more athleisure or sports fashion. They offer everything from soccer balls to wearables and all kinds of clothing and apparel for many different sports. Sponsorship is a huge part of this industry. They help sell the product and endorse it. They have everything from basketball players, soccer players, entertainment artists, and they're represented in all of the industries listed there. Their strategy going forward is that they want to utilize that diverse brand portfolio, so everything from the Reebok and the TaylorMade. They also want to expand in high potential markets, one of them being North America. They want to lead through innovation and be sustainable. Further into the future, they want to make sure that they interact more fully with their customers, being able to potentially customize their products. And they will do this by having a dynamic and responsive supply chain. One of their other initiatives is to look at those currency neutral states or states where they're having issues with currency and those markets. So one could be Russia and one could be North America as well. But what do people outside think about Adidas and their growth recently? We'll talk a little bit more about their Q1 numbers, but they've had a good quarter, which is positive because in the last couple of years they've had declining revenues. So everyone also thinks that they're likely to execute on their most recent strategy, but everyone's a little bit skeptical, and right now it's more of a hold. If we look at how they're competing, we can look at a 5 forces and barriers to entry. Switching cost is going to be low. There's a lot of competition. If we look at bargaining power of suppliers, it's going to be somewhat moderate because materials are common. There's a lot of technology being used though, so Adidas has a little bit of room to play. The threat of new entrants is low. There's a lot of brand identity in this industry, and entering that market would be challenging at this point. So threat of substitutes, competition again is very high, so substituting it would be difficult. And then bargaining power of buyers, it's very low because the prices are pretty much set across the board if you look at all these different brands and companies that offer similar products. If we take a look at its competitor, Nike, it was founded in 1949. Bill Bowerman and Phil Knight, and their current CEO is Mark Parker, and they're headquartered in Oregon. So their motto is to find your greatness. If you have a body, you can be an athlete, and just do it. So they want to bring inspiration and innovation to every athlete in the world. If we dig a little bit more into their history, they were founded originally as Blue Ribbon Sports, then they became Nike. They developed their core products around that time. Then they found their first sponsorship in 1984 with Michael Jordan, expanded, acquired some brands, and grew from there. They also have Umbro, Cole Haan, Converse, and Hurley. They offer a wide variety of products, including shoes, the Air Jordans we're all familiar with, Nike soccer, women's products, and equipment. If we break the revenue down, a huge portion is footwear, which is a hard market to compete in. Sponsorships, they're across the board. We have soccer players like Neymar and golf athletes as well. Into the future, they want to become innovative but really create those experiences for their consumers. They want to have a closed business model, so absolutely no waste, and they want to make sure that they're sustainable in everything that they do, even finding innovative ways to do that. They also want to work with their partners, whether it's in the government or consumers, to make sure that their goals are accomplished as well. But what do people think about Nike? They've been growing consistently over several quarters, including Q1. It was very positive, and most people believe that they will continue to grow. So it's a very good investment at this point. But there are some risks, so we'll take a look at those.
Thanks, Karen. So we'll look at the different kinds of risks that we have. We have the strategic risk, the structural, competition, and brand awareness, all these under strategic. And then you have the operational risk, which are the business partner risk, Adidas store related risk, IT dependency, inventory, and innovation and design. You have other risks like the legal and compliance and the finance-related financial risks. In the legal compliance, you have international regulations, defective products, fraud and intellectual property related risks. And in financial, you have the currency and liquidity, credit, and interest rate related. So this is how the management of Adidas rates the different kinds of risks, whether they are major or significant. So coming to the risks to Nike, they more or less have the same risks as in the case of Adidas, and it's like competition, brand awareness, negative publicity, etc., media coverage. There are also other risks related to global economic factors and sale of stock by chairman and also maintaining the brand popularity. Next, coming to the business segmentation. So in business segmentation, you have Adidas, which was intended to be a product line for soccer sportswear originally, but later on currently they're targeting the other markets too, and they are more popular in Europe and Asia. Nike is more popular in the Americas, and it was originally focused on track, but since 1972 it began expanding in all segments, and it's currently the world's #1 marketeer and manufacturer in athletic sportswear. So this is a slide which shows the entire brand market share, and you can see that Nike is at the top 4 with a share of market share of 8.78 billion, and Adidas is at number 14 with 5.94 billion as per InfoSeek. Then, what are the business drivers for Adidas? Foremost is group strategy, global sales strategy, and global brand strategy. Now these cover factors like diversifying their brand portfolio and investments, a flexible supply chain, sustainability, and long-term shareholder value, etc. Next, we come to the executive compensation structure for Adidas. You can see the entire board compensation structure, and also the CEO's compensation structure. So the CEO has, in 2004, the overall compensation is $4.6 million, and the other board members too. This is the executive compensation structure for Nike, and the CEO has a overall compensation of 14 million in 2014, 10 million more than the Adidas CEO. The other board members' compensation has also been indicated. Next, the earnings call for Q1 of 2015 as declared by the Adidas CEO. So the CEO has declared that there will be more focus on Adidas, Reebok, and TaylorMade with the sale of Rockport. Then Adidas has been engaging in repurchase of sales. At the end of last year, they've repurchased 300 million worth of euro worth of shares, and they've done the same in March of this year. Then the outpayment to shareholders was at 30 to 50%, and they are announcing a new logo which is known as Creating the New, which focuses on an agile and iterative and proactive process. And the group sales were at a strong 9%, and in euro terms they were like 17%. The growth at Adidas and Reebok respectively were at 11% and 9%, and the operating margin recently increased by 10 basis points to 8.9 as per the call. Next, we look over the horizontal analysis of the income statement and the horizontal analysis for the balance sheet. This is the vertical analysis of the income of the balance sheet and the income statements respectively. So, what are the observations from the horizontal and vertical analysis? You notice that in terms of Adidas, there is a dramatic increase in the net income and the PP&E, that is property, plant and equipment, and also that their cost of goods increase is much greater than their sales increase, whereas this has reversed in the case of Nike, where the cost of goods has increased. The COGS related to the sales has shown a decrease, and that will be it. Next, we'll go over the key ratios, which will be explained by Alex.
So these are some of the key ratios, the profitability ratios on top, liquidity ratios on bottom. As you can see, these are based off the 2014 annual report numbers. As you can see, for most of the ratios, Nike has the clear advantage. A couple of the ratios worth mentioning for gross margin, you can actually see that Adidas has a higher gross margin than Nike. However, compared to 2013, Adidas's gross margin fell, whereas Nike's rose, which is why in our opinion, it really depends. So for return on assets, arguably one of the most important measures of profitability, we saw that Nike's return on assets was a lot higher. Some possible reasons, Nike not only had higher base sales, but Nike products are generally more expensive, so that could be why they had a higher return on assets. The earnings per share, Nike had higher. You can see the possible cause there. Now, one of the interesting features is the fact that Nike actually has a lower dividend yield than Adidas. This could be because in 2014, Nike's net cash flow actually went down compared to 2013. Here's some more ratios. Some of these will be important in a few slides. So going to the conclusion, we now have to come up with a decision whether or not to invest in Nike or Adidas. So here is a head-to-head, again, more numbers comparing the two companies. And here's the side-by-side of the 3-year stock performance. That's Adidas's US stock compared to Nike's stock. As you can see, Nike stock has been a lot more consistent. So one of the big questions about investing in Adidas is whether or not they'll rebound from a disappointing 2014. As you can see in Q1 2015, they did show growth in sales, profit, and the gross margin went back in the right direction. There are also, though, questions about their growth strategies. How feasible is Adidas' strategies for technology innovation, customization? The industry itself is based off a lot of things that are out of their control. Customer demand, customer preferences could change at any moment. There's a lot more new competitors that Adidas has to deal with, like Under Armour and Skechers. And there's also questions about Adidas' brand strength, especially in North America. Now for Nike, Nike's in the position where they're already on top. So their biggest weakness is arguably that they have more pressure to meet their expectations, and there's nowhere to go but down. Now they do also have lower gross margins than Adidas, which could be because they have higher costs. However, it's possible that their high prices and high sales could offset their costs. And their brand strength is arguably higher, although the recent FIFA arrest could hurt the brand a little. So then, as you can see, there's new trends in footwear and apparel. Footwear with casual walking shoes, apparel with more leisure, fashionable athletic clothing. So as an investor, one of the things we want to make clear is that Adidas is not a bad investment. They're certainly showing signs of rebounding from 2014. However, just looking at the ratios that we saw earlier, return on asset, return on equity, and with the stock performance, it's really hard to argue that Nike is the much safer of the two companies from an investor's point of view. Now for who we lend to, both companies have been doing a lot of borrowing. They both invested in a lot of plant, property, and equipment. However, as we saw with the ratios, Nike does have not only greater liquidity ratios, but their debt to equity ratio is lower, so there are lower risks to creditors. They have also make their payments on average quicker than Adidas. So again, Adidas is not a bad choice from a creditor's point of view, but as a creditor, Nike's still a better company to lend to. And we would give them leverage as long as their debt to equity ratio remains under 1. Thank you very much.